The competition watchdog wants new powers to rein in Google's dominance of the advertising tech market. For more on this, I'm joined by my colleague, our business reporter, Ed Boyd. Ed, the ACCC says Google's dominance of the online ad sector is hurting local businesses and consumers.
Yes, the ACCC has just done an 18-month inquiry into online advertising and they released a 200-page report today. And the conclusion is pretty simple. The ACCC say Google have too much power in this space and they need to be reined in. So the sector is really all about buying and selling online advertising on websites and apps. It's worth about $3 billion a year. Things like pop-ups, banners, and videos, these are open display ads. And the ACCC found that more than 90% of ad impressions in 2020 passed through at least one Google service. The other issue is Google has a vertically integrated model, meaning it can buy ads for you, sell ads to you, and operate the ad exchange between the two parties. So this is a quote here from the chair of the ACCC, Rod Sims. He says, new regulatory solutions are needed to address Google's dominance and to restore competition to the ad sector for the benefit of businesses and consumers. We recommend rules be considered to manage conflicts of interest, prevent anti-competitive self-preferencing, and ensure rival ad tech providers can compete on their merits. So Treasurer Josh Frydenberg has acknowledged that he's received the report and he's going to be taking a look at some of the findings over the next few months, and watch this space. We might see if the ACCC get a little bit more power in the future with Google.
Indeed, Ed. And shifting to the markets now, this is a massive one. The Chinese property developer Evergrande has another loan repayment. They missed one, they've got another one due tomorrow.
Missed one last week. They've got another one due tomorrow, about $50 million this time around. And the concern is they're not going to be able to make the payment tomorrow, and markets are a little bit spooked about it. If it doesn't make its interest payment tomorrow, there is a 30-day grace period, so it has 30 days to come up with the funds. But the question is, will it be able to make these payments in the future? It's been spooking markets for the last couple of weeks. It missed a payment last week. Its next payment's tomorrow. Will it be able to pay up? We're not really sure at this stage. If we look at this chart here, though, you can see the value of Evergrande's bonds that have just dropped significantly since May. The company's been under pressure since then. That really shows investor confidence is dented in the company. And if we shift to the next slide, you can see here the impact on Australian iron ore companies. They obviously sell a lot of iron ore that Evergrande uses to build apartment blocks. You can see the share prices there of BHP, Rio Tinto and Fortescue Metals all sliding downwards. So that'll be the focus for the markets tomorrow, Kieran. Today, the stock market did fall as well. It fell 1.5%. The energy sector were the best performers.
Ed, thanks for the update.